Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature, mental situation, or needs. Before acting on any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the hosts, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Good morning, everyone. Hope everyone is having a cracking start to their day, and quite a different scene for me today out here in the Gold Coast for the Property Summit 2025. So looking forward to it. Everyone seems to be rolling in a few days earlier, which is nice. So guys, let's continue our conversation from last week around asset allocation and put it into practice, really. So the theme for today is just to recap on the world markets and see where they are, what they're doing, how they've sort of compared. You know, coming to an end of financial year, you kind of tend to look back and see how you've performed, whether that's financially, whether that's asset based and whatnot. So today I thought, you know what, we spoke about the equities in the last I think episode before last, and I thought it'd be quite a good topic to cover off today. And I guess the other reason for it, we've got ASX, our Australian Stock Exchange, hitting the record highs during the week. I think it's come off boil a couple of percent or 1% by the end of trading yesterday. But I think it's important to kind of understand what is happening, where things are sort of tracking, and benchmark it against other markets, because ultimately that falls and forms part of your diversification, part of your asset allocation. And within each market, you'll have different markets within that. So, if I look at the equities, for example, which is the theme for today, you've got us in Australia, so you've got the Aussie market, you've got the big market in the US, you've got Asia, you've got Europe. So all these markets are performing differently, and we'll touch on that in the tick. If you look at things like a property, for example, we've got, let's just say if we stay within Australia, you've got different states, with different drivers behind the property market. So, it's a type of diversification as well. Like if you look at, again, not a property advisor, I'm more of a financial planner, and if you look at the property market, you look at, like, for example, Gold Coast right now, coming in here last night, it seems like everything is booming around here. The towers that just keep going up and up. You go to Melbourne and everything is a little bit more mute around there. Don't know what is happening in other states at the moment, but it's important to stay diversified and have your investments in different markets. Looks like we've got Jeff. Good morning, Jeff. Yeah, mate, the tariffs are a big theme, and I guess I do want to touch on that in the markets review over the next sort of 5-10 minutes, and sort of chat about the impact of that. So, going into this sort of Wealth Coffee Chats episode, I looked back at the last 2 months and where things were, because 2 months ago, that's when the tariffs kind of hit the news, and that's when everyone panicked and a big sell button was pressed around the world. So fast forward 2 months, or just tad over, say 9-10 weeks. I'm looking down at my numbers here, and the markets in Australia, close to home, we're up 17% in the last 10 weeks. All right, then we look at the US, they're up 20%. Then let's have a look at Europe. They are up 17% as well. And then the interesting one is actually Asia, so Shanghai Stock Exchange. So they are up 10%, right? So if you compare that to Aussie and, say, the US, they are about 50% under where we are in terms of the rebound. So again, it comes back down to the asset allocation that I've been chatting to you guys about over the last several episodes, and the importance of having your eggs not in one basket, but across different channels, right? And in this case, across different markets. So whenever I speak to my clients, I always make a point that, look, yes, Australia is great. Yes, we've got access to dividends, franking credits, etc., that perhaps the rest of the world don't have at the same capacity. However, we are very, very little market in comparison to the world, sort of 2-3% of the world right now, and other markets around the world can achieve different results, right? And we can see that. So if I was to, again, short term, as I always said, it's not an indicator as to how the markets are performing or how well or bad you have invested, right? So right now, tariffs, made a big theme, and then the unwinding of that has provided some great results on the back of it. So if we expand that out and look at 6 months, it gets quite interesting, because you've got Europe. They're sitting at about 8% for the year. The US is down 1%, and Shanghai is down 2%. Aussie is up 3%, right? Again, this is all short term, right? So you can see how from the last 2 months to 6 months, the difference is quite large. So hence, when we do any type of investing, you want to consider your timeline, right? Is this a short-term investment, long-term investment? Typically, long-term, you tend to come out with a better result. Short-term, like what we've seen over the last 2 months, you can get double-digit returns on the back of that as well. Then if we were to extend it out to actually a medium reasonable time frame, say 5 years, again, very interesting numbers. All right. So the ASX, so our market, is up 46% over the last 5 years. Then Europe is up 67%. And the US is up almost 100%. So basically you doubled your money if you invested, at the peak of the pandemic, and you held it until now. You're looking at about 100% uplift. Provided that most of these holdings in the US are tech stocks, so you'd have to be in that sort of top level investments. But the interesting one here is the Shanghai. So this is the Asian Stock Exchange. They are, over the last 5 years, they're only up 16%. Right, super important because Asia is a big market. Right, there's a lot of people there. There's some big companies there. Provided that similar to Australia, most of the market is like us. We've got banking and sort of mining sectors that dominate it. Similar to Asia as well, they've got a large banking presence and they've got some tech in there as well. So what does that mean, right? So when you put together a portfolio of investments, say in equities, you got to look at different markets because they're going to give you different results, right? So as we can see here, the US is driven by the tech. ASX, our market, is driven by the banking. Similar with China and Europe. Europe is an interesting one, right? Because they are facing a number of headwinds with their economies there. But if you look at, what are their sort of top holdings there, you've got the SAP Tech, which is a tech company, and you've got Louis Vuitton in there as well, which is a big corporation. So very much service-based type of market. So again, it's similar to if I'll go back to the property sort of example. When you look at a property, you're probably looking for location, obviously, but then what else does it give you? Probably income or potential for growth, right? So you kind of choose and pick what sort of factors you want to get out of your investment. So because equities or shares, whichever way you want to call them, form such a big part of your overall investment portfolio, right? You may or may not know that if you still have your investments inside super sitting there, then most likely 80 to 90% of it is sitting inside the equities market. You may have properties or other assets outside, that's good, but this is the theme that typically is set up by an average super fund. So unless you receive advice and that was set up to be in line with what you want and your tolerances, then most likely it'll be sitting predominantly in equities. So very big asset class. Looking back at it, performed quite well over the last 5 years. It doesn't mean that it's going to continue to do that as well. So you want to be mindful and you want to always have Plan B in place. So at the moment, everything is sort of looking bright for the equities. The tariffs seem to be coming off the boil. The interest rates seem to be coming down as well. So all of these sort of factors are contributing to a better result for the equities. Equities is very much an area that is that can dislocate from what is happening in the world. So if tariffs and whatnot, yes, that's there, but it's very emotional as well, right? So a lot of the moves can be done on an emotional basis. which means that, like I think I gave you an example several episodes ago with Tesla, where they've provided the worst sort of results for the company in years, or probably from its sort of birth to that time. But the market sort of rallied on the back of that, and then you've got other companies that are providing a much better outlook and results, but then they get sold off, right? So very interesting. So keep in mind that we don't just have the Aussie market, we've got international market, and yes, the US is probably the dominant one, but you've got other markets there as well, like I mentioned, Europe, Asia. They're probably the other sort of big ones that you want to look at and explore. Obviously you've got India in there as well, so I haven't mentioned that too much. So if you think about where things are moving, with the outsourcing of manufacturing, perhaps India might be the next sort of place to take over from China. You don't know, but if you've got diversification across all of these classes, then you'll most likely participate in any uplift as well. So yeah, I just wanted to kind of give you that sort of very quick summary about the world markets and where they have sort of been over the last 5 years. I know it's been a turbulent time, but at the moment everything is looking like it's on the up. So yeah, I hope you guys enjoyed this episode, and I'll catch you all next week. Thank you.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.